I'm Ashton Addison from EventChain for Investmentpitch Media and FinTech News Network. And today on Blockchain Interviews, we have Nick Cowan, the CEO of the Gibraltar Stock Exchange. Nick, welcome to the show. It's a pleasure to have you here today.
Thanks for having me. It's trying times. We're in early April, and obviously, I think a lot of us are in some form of lockdown. So it's been certainly a challenging time, and this is a great way to start a Friday it's your Thursday evening, but to have a chat with you about the future of digital securities is a great opportunity for me. So thank you.
Definitely, and I'm very excited as well, Nick, for this discussion. And it would be great if you could kick off the interview by giving a little bit of your background in the capital markets and finance and how that experience has aided in growing the Gibraltar Stock Exchange.
Yeah, sure. Thank you. So even though I look pretty young, I've unfortunately been doing this for nearly 36 years. So when I started out in '84, I've always been in capital markets and spent time in London and Japan. I was the global head of equities for one of the largest investment banks in the world. And what that did was I oversaw 43 stock exchange and futures exchanges. So we really had a good handle on some of the efficiencies and inefficiencies of securities. I then left the industry pre-Lehman's to run my own money, and then we started this business here. Gibraltar was the last jurisdiction in the EU. We're just about still in the EU at the time without an exchange. So I was invited to consult and help a small team get going, and that actually led to me getting more and more involved. And I said to my wife, it's a 3-month project, and that was 8 years ago. So that's where we are today. So, and I think just by way of background here, I think Gibraltar as a jurisdiction was looking at fintech and how it could perhaps position itself, future proofing, particularly with Brexit possibly happening or not happening. And I think for us, we just looked at that as a great opportunity to say, look, we're in the right jurisdiction. There's a fintech community here. And if you asked yourself, is there a role for a small traditional T+2 exchange in a small jurisdiction, and can that be relevant globally? The answer is not really. So actually, why don't we do something completely non-restricted by legacy technology, non-restricted by legacy interest? Let's just absolutely just go down the digital securities route. And that decision was made at the end of 17, beginning of 18. So we've been 2 years really in terms of heads down, really driving through that digital security strategy. And, for us, 2020 is the year of execution, which I can sort of give a little bit more detail about later. So it's been an amazing journey so far. And I think we're on the brink of just, we talk about a paradigm shift. And I think markets like we're looking at right now just totally underline the need to move to a frictionless economy in our view.
Definitely, and that's a great intro, Nick. Thank you. And coming from the traditional finance space, did you see it as a giant leap to move into a new decentralized technology ledger, integrating it into regulated exchanges when traditionally they've been against that kind of technology? Is it going against the grain, or is it really just looking forward to the future and seeing that this is how the industry is going to be moving?
Yeah, I think what we try to look at is, I think you've got to look at, first of all, as inefficiency. Okay, so the common view is that the T+2 model, right? So when I sell my securities to you, 2 days later, you get your securities and I get your money. And in theory, it works. But, I guess one of our insights for doing this so long is that you have a number of challenges, which I think we want, if you like, the problem that we want to solve. I think number one is cost. The cost of a life cycle of a trade is something like 5 to 15 basis points. Now, when we talk about the life cycle of a trade, we're talking about my mum placing an order, a broker placing that order on an exchange, the transactions basically going through a central counterparty, a CSD, the banking network, and you have this whole machinery, financial market infrastructure, FMIs they're called, which basically ensure that the T+2 model works. Now, what you have therefore is you have unnecessary friction and cost, basically 5 to 15 basis points if you look at the entire cycle. You have capital. So if you're looking at the way trade basically moves. If you place an order with your broker, I don't know whether you know, but your broker is basically having to post capital to make sure that 2 days later the trade basically settles. So capital is a big, big issue. The other thing is counterparty risk. Counterparty risk, people think, well, counterparty risk, is that actually important? And for us, you look at what happened with Lehman's. When you have a 2-day window, if something happens in that 2-day window, you might think, well, that doesn't affect me. It does, because actually you can end up with systemic risk. So we believe counterparty risk is completely unresolved from the Lehman's event. Nothing has actually changed. In fact, nothing's really changed in my 36 years. We might have gone from T+3 to T+2, but that's really, and maybe we've gone from paper to electronic settlement. And the third thing is country interoperability. If you look at exchanges generally, they're governed by geography. They don't really interoperate. So you've got the New York Stock Exchange, you've got the London Stock Exchange, you've got the Japan Stock Exchange, you've got the Singapore Exchange, and you tend to have issuers go to that market, and they're kind of restricted by the size of that market. So we see, if you imagine those issues being listed out, what we've been working on is, can we solve the cost problem? Okay, and basically look for 70 to 80% efficiency by removing the friction. Can we resolve the capital problem by having absolutely no capital being posted at all because it's T-instant? Can we resolve the counterparty risk? When I trade, I settle. So if I sell my shares to you, your wallet is populated and my wallet's populated instantaneously. And the fourth thing is, can we build an interoperable universe where issuers get access to investor pools outside the country where perhaps they're coming to an exchange? And can also investors like you and me get access to some pretty cool stuff that might be on another exchange that we can basically get access to because we're part of the same network and dashboard? So we absolutely looked at the problem as we see it. Is there a solution? And if we're going to find that solution, we have to comply with the regulations. We have to comply with the directives. So we came at it very much from we know the directives, we know what the regulations look like, we understand how the markets work, the plumbing. Let's basically look at the technology required to move to that T-instant model. And that journey started for us a couple of years ago. And in fact, when we looked at the technology that was out there, we couldn't really reconcile the technology that was out there to meet our objectives. I'll explain a little bit about that later. So we actually ended up designing and building our own protocol because we couldn't see any of the existing protocols really fulfilling primarily the directives. That's the key. Technology can normally solve most problems, but unless you're going to achieve T-instant, and T-instant is the key, that you're going to struggle to achieve those efficiencies. So when you look at the journey that we've been on, we actually said, you know what, there is a huge amount from the crypto universe that we've learned, because they're effectively a T-instant model, right? So when you buy or sell BTC or Ether or anything else, there are no financial market infrastructure guys in the way. You open an account with an exchange and you can trade. So you don't have to go through a broker. You don't have to go through anything. You can basically have this really quite efficient model, but it doesn't comply with all the regulations. Then you get the regulated world, which is a little bit legacy and archaic and a lot of friction. So we've said, okay, let's squash those together and create this new smart securities end-to-end product, which we believe will unleash just awesome efficiency. And at the end of the day, we just want more choice. We want it at a lower price, and we want to make things. We want basically the capital world to move more freely.
Thank you, Nick. That's a great overview of the inefficiencies as well as the solutions that we will be seeing. And to touch on that a little further, I'd love to know. You've been working on this for more than a few years already. At what state are you guys in terms of solving all of these problems, and is this already a reality? Do we have instantaneous settlement, and if not, what are the timelines looking like for at least for GSX?
Yeah, so what we looked at, there's a lot of frustration out there as to why isn't there a trading venue yet that actually provides digital securities in a liquid form? And my short answer is, it's not the technology, it's the regulatory framework that when you try to put the two together, it's really complicated. So one of the challenges that we're all facing is, our view, rightly or wrongly, is if you're going to achieve T-instant, it's actually incompatible with a consensus model. Does that make sense? Because if you do a trade that provides legal and beneficial title transfer from me to you at that 0.001 of a second, you can't then have 7 seconds later nodes saying, do we approve the trade or do we not approve the trade? Because it's already happened. So I think that's been one of the challenges that the blockchain and regulatory markets have tried to overcome, and that's one of the reasons why you haven't seen a trading venue yet. So for us, we think we've solved that because we spent 2 years trying to fix it. So we are at the moment in application, as I said, with an exchange. We're opening a trading venue in Estonia. We're in application right now there. We're actually already applying for a CSD license, because the CSD and the trading venue have to integrate into a vertical stack. And we're also in application at an exchange for an exchange license in Asia, because our vision is we want to have a number of exchanges that you can, as an issuer, have your token trading 24/5 around the world in securities format, and also being a central securities depository, so a digital CSD. The legislation states that you can't have a security trading on any trading venue unless there is a CSD providing the record of basically the book of members, the book of shareholders. That's basically the law, as dumb as that is. So there's no way around it. And so you've got to basically have a CSD that is enabled to work in a digital way. And a lot of the CSDs at the moment either aren't there, or guess what, they might not want to get there too quickly because it's gonna eat into their business model. So you're at this really interesting time where there's a lot of protection, I think, attitude or migration attitude going on, and we don't suffer from that legacy. So for us, in terms of timeline, we are hoping end of Q2, Q3 this year to turn on our first trading venue, which will be just an awesome breakthrough for us. So that's really where we're at.
That's great, Nick. And you touched on regulation and the importance of it. If you could give a brief overview of the progressiveness of the regulation in Gibraltar, and what do you see in the European Union and across Europe for introducing similar regulation that will allow this kind of technology to spread across all continents?
Yeah, I think we have to be realistic that regulations, particularly from a European perspective, or even from a US perspective, or wherever, they move pretty slowly. If you look at what happened post Lehman's, we had this big directive here called MiFID, Markets in Financial Instruments. They then worked on MiFID 2. It took them 10 years to get MiFID 2 rolled out. So nothing really happens very quickly. I think but you are seeing now noise from the European Union that they are really keen on innovation. I mean, I think everybody can see the efficiencies that we can basically achieve. And Gibraltar is part of that blanket of regulation, because we're still in the EU. And even if we leave the EU with the UK this December, we'll probably have an equivalence regime that starts standing. Really, wherever you go, whether it's the stateside, Asia, the regulations tend to be the same, and they're there effectively to make sure that we've got investor protection in place, market abuse, that transparency, and all those good things. So that I don't see any of that changing. What we have, and I've often been at conferences where I listen to panels, and they're basically complaining that the regulators either don't understand or regulations have to change. My view on that is, look, what you have to do is you have to get the technology to comply with the directives and the regulations, not the other way around, because it could take 10 years. So don't lose sleep over that. If there's a way through the minefield to navigate, that is incumbent on us to see if we can do that. And that's basically what we spend a lot of our time working on, to make sure that we comply with wonderful directives like settlement finality, which is if you do a trade, you're guaranteed that you will basically get those securities in 2 days' time in the current model. So you've got settlement finality, you've got MiFID, you've got the transparency directive, you've got market abuse, you've got all these things that you basically have to comply with, which you've got to get the tech to effectively fit in with that, and not the other way around, in our view.
Very interesting. And besides regulation, do you see other necessary steps for the cryptocurrency industry that they need to take to help drive more institutional adoption, and vice versa between these two industries?
I think so. Yeah, I think so. I think I've been, look, I was wrong. I said in 2018, this would be the year of regulation for crypto exchanges. And I was clearly completely on the wrong foot, because generally regulators, I think, have been quite slow in terms of putting regulatory frameworks around digital exchanges. Regulations are there primarily to protect people like you and me, so that when we place an order, we know who the exchanges that we're dealing with. We know that our assets are safe, etc., etc. All those good things. And so you're not going to have is there a cold wallet? If there isn't a cold wallet, who owns the keys to the hot wallet? Is the hot wallet insured? And all those good things. So I think I was surprised by that. I think what will happen is, if you're going to, first of all, institutions have to normally deal with regulated entities, right? So if you're going to get institutional adoption, you're going to need to have exchanges regulated in the digital world. So you look at exchanges like Coinbase, etc., Liquid, us. Basically, there's that mindset in place. I think other exchanges, which are particularly more retail focused as opposed to institutional focused, they really haven't gone down the regulated route as fast as perhaps other exchanges, because there's a lot of protection and regulatory bureaucracy and all that good stuff which comes with anti-money laundering directive number 5. I could talk about that all day if you have no life, but they're there for a really good reason, and that's to make sure that money isn't being put through exchanges that can be put to bad use, right? So I definitely went too early, I think, in terms of my view on crypto exchanges being regulated. I don't think you'll see wholesale institutional adoption until those boxes are ticked, in my view. But I do believe as regulators catch up, and our view is you'll get this convergence between the digital community and the securities community, where you can basically, from your phone, say, I want to buy Apple in digital form, and I want to use dollars, or I want to use BTC. It doesn't matter. You've got something in your wallet, and you can basically just press buy. And in fact, we go a step further. You don't necessarily have to just buy from our exchange. Because we've got a CSD, our vision is we can have lots of digital exchanges, and you basically get the best price on Apple, to name an issuer. So that's what we see as a really exciting development. But I do believe that regulations have to catch up the digital currency exchanges.
Well, it's very cool, and I'm very much looking forward to being able to purchase stocks with BTC and vice versa, and that's something that we're looking forward to. And we're running out of time, Nick, but how can the viewers follow along with the updates of the Gibraltar Stock Exchange as they move towards integrating this distributed ledger technology?
Yeah, I think you can. You can go to gsx.gi. You can go to gsxgroup.global, which is our parent company, and under the group, we've basically got this series of basically exchanges that we're starting to roll out this year. We're looking to open our primary launch pad in 2 weeks' time, called the Grid, which again is an STO platform. So there's a number of things we'll be looking to roll out this year. But yeah, gsx.gi is a pretty good place to start, and we will be keeping our community up to speed with everything that we're doing basically over the next 2 or 3 quarters. So I think it's going to be a really cool year, and as terrible, genuinely, as the environment we're living in right now, it kind of drives home that effectively a digital world with as little friction as possible is for our view. In our view, the natural next step in terms of the evolution of capital markets. So I think automation will be the way forward, and so we hope to be at the front of that.
Well said. Well, I'll leave those links to your website and those other links in the description box below for the viewers. Thank you so much for the time today, Nick. It's been a pleasure learning about GSX, and let's follow up in the near future.
Fantastic. I appreciate you having me, and all the best. Keep safe. Thank you.